Buckle up, everyone. You are strapped in and ready for Insurance Hour with me, your host, Karl Susman, informing, educating, and entertaining one policy at a time. This is Insurance Hour. Hello. This is Insurance Hour. I am your host, Karl Susman. Our continued coverage on the California wildfires begins now. Our phone lines are not being manned because we are going through your questions today, but you can still call or text your questions in. The number is 559-656-0317, or you can send your questions in by email to questions@insurancehour.com. A big hello to our new friends over at KEIB Radio. We are glad to be here. Let's jump right in and talk about these wildfires. The first thing I want everyone to be aware of is that there are consumer protections that are out there that you might not be aware of. So let's talk about those first things first. Now, as you can imagine, many people have insurance policies. Those insurance policies are contracts. However, the Department of Insurance does have the ability, well, I suppose ability or not, they will give decrees of some changes to what those existing insurance policies and or contracts, however you want to look at them, are, in the event that they feel that it is in the public interest to do so. And here is the example that I want you to be aware of first. If you are in an area that has been impacted by a wildfire, chances are you may not be able to be non-renewed by your insurance company. I know that sounds strange because insurance companies are private companies, but the Department of Insurance does have that ability to turn around and say, listen, we want you to do X, Y, Z. And in this case, if you are in an area that has been impacted by the wildfires, then you have protection against non-renewal for at least 12 months. Now, if it turns out your home was a total loss, then you have protection for up to 24 months, 2 years. Now, it doesn't stop there. If you are in an area that is considered adjacent to these areas, you also have protection for up to 1 year. Now, if you're not sure if your home is in a protected area or not, you can go to the website for the Department of Insurance. There's a link for you to put in your address, and it will tell you right then and there what you are eligible for. That link is at insurance.ca.gov. Once again, that's insurance, all spelled out, .ca for California, .gov. Insurance.ca.gov. Put your address in there, and you can find out if your home is in a protected area, and if so, for how long. Now, understand that just because the Department of Insurance comes out and says that, it doesn't all of a sudden just happen automatically. The industry has to still basically work through the system to do that. So it's entirely possible that you might still receive a non-renewal notice, in which case you simply call your insurance company or call the agent or broker, whatever the case might be, and say, hey, I checked with the Department of Insurance. I'm in one of those areas you can't non-renew me, and they will hopefully do the right thing and lift that non-renewal. Again, don't expect it to just happen automatically. Be sure you take that step if you've checked and you are in a protected area, that you let the carrier know in the event you do receive a non-renewal. That's a big one. Another thing to be aware of is, what do you do if you were actually impacted by these wildfires? You are no longer in your home. Now, there are multiple steps that you're going to want to take, but before I get into those, I want to be sure you're aware of a few things that I've seen come up that are just, there's no way to say it other than just they are tragic. There are scam galore going on out there. I mean, the scammers are coming out of the woodworks. I want to give you just a few highlights of things to be aware of, to look out for, because I'm seeing this probably every couple of days. And if I'm seeing it, it's not just me. It's definitely out there. The first thing you might find is that contractors or people that are claiming to be contractors are coming out of the woodworks, and they're saying, hey, it's going to be a long time before we rebuild, but if you sign this contract with me, give me a deposit, I'll put you further up the list. And the larger your deposit is, the further up the list I'll put you. Now, that's not legal as far as I know. Again, disclosure, not an attorney, but I am pretty sure you cannot do that, because effectively you are having a customer sign a blank check because there's no bid on that contract. There's nothing on there that says what it will cost to rebuild. You're basically just promising them to use them when the time comes, and you're giving them money up front. So if you're given a contract and told you need to sign this right now, it's a good red flag. Anytime you're being rushed, there's probably a reason, and it's probably something you want to be careful of. Talk to an attorney, talk to someone, have other people look at it and decide, is this legit or not? Another scam that I'm seeing happen are people are getting contacted by organizations or people claiming to be with the federal government. Now, as a side note, you should know that the federal government does not just randomly text you or call you and offer you money. I know it might seem like that sometimes, but in fact, that does not happen. That's not a thing. Normally, if you are going to be looking for aid in some form, whether it be in the form of a grant from FEMA or a loan from the SBA, the Small Business Administration, then you will reach out to them first. After you've reached out to them, they might then contact you by email or by cell. As a side note, if you are looking to get disaster assistance, the place to go is disasterassistance.gov. Don't go anywhere else. Disasterassistance.gov. Any other website, and there are ads popping up all over the place that are purporting to be with the feds offering you help, are usually scams. So just go to the source. Remember again, disasterassistance.gov. That's where you want to go. Now, while we're talking about that, keep in mind that the government is offering two types of general assistance. One is in the form of grants. That's where they basically hand you money, and that's through FEMA. Depending on your situation, whether it's a residential loss or a commercial loss, you could be looking at anywhere from around $40,000 to maybe $100,000. If you are looking for a loan, then the SBA is usually giving, depending again, if it's a residential or commercial property, if it's a nonprofit, there are some other categories in there, but in the neighborhood of about $2 million. Now, remember, this is not a gift. This is a loan. So it's going to be a low interest loan. I believe they're offering 4%, amortized over 30 years. So it's basically like getting a new loan, effectively. So if it turns out that you are looking to get some money, and you can check with FEMA for grants, and you can check with the SBA for loans, that's something that is out there and available. Keep in mind also, a loan does have to be paid back. That's not free money. It might be low interest money, but it's not free. And another thing to keep in mind is that you are able to collect from the feds as well as your insurance policy. Now, the feds may ask what type of insurance you have, and it may impact the grant aspect. That's the free money. But the loans are not going to typically be impacted by you having insurance or what the insurance policy may or may not be paying out. All right, a lot of information we stuffed into this first segment. Let's take our first quick break. And when we come back, we're going to go over some more information of things you need to know whether you were impacted directly by these wildfires or not. This is Insurance Hour. I am your host, Karl Susman. We will be back in 60 seconds answering your questions, giving you advice, all that other good stuff. So sit back, relax, and we will be back in a flash. Stand by. Let's talk about earthquakes for a minute. Look, we know we live in earthquake country here in California. Powerful, devastating earthquakes have happened here before, and science says that they will happen again. They can't tell us exactly when. They can just tell us that it is going to happen. Count on it. Prepare for it. Did you know that earthquakes are not covered by your homeowner's insurance policy? You need a separate policy to give you the peace of mind that you will be able to recover without getting financially wiped out the next time we get hit with a big one. There is a great company here in California that will provide you with earthquake coverage you need at a price you can afford. That company is GeoVera. I have a policy through GeoVera. I really like how easy it is to choose from all of their great coverage options, backed by the financial strength that lets me know that they will be here for me when I need them the most. Go to getquake.com/insurance hour to learn more. That's getquake.com/insurance hour. Make sure you're ready for the day when the ground shakes again. Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. The phone lines are not being manned because we are taking our special coverage on the California wildfires another day. But you can still call or text in with your questions. That phone number is 559-656-0317, phone or text. And you can send your questions in by email to questions@insurancehour.com. I want to say a big hello to our new friends over at KEIB, AM 1150, The Patriot. We are glad to be here. Now, before I go on, I want to thank our sponsor, GeoVera Insurance Company. Now, GeoVera is an earthquake insurance company. That is what they do. And let me tell you something. When all of these fires happened and all of these structures were lost, what do you think the insurance companies did when they cover you for earthquake insurance? Well, they're sitting there thinking, well, there's no structure left. What should we do? They could have done nothing, But companies like GeoVera did the right thing. And they turned around and they said, okay, anyone that wants to cancel their policy, which most would, of course, since there is no policy, there's no home to protect, they will cancel the policy, they will prorate the cancellation, and regardless of when you come to them, they will go back and cancel it retroactively to the date of the fire. First class move by GeoVera. And let me tell you, I've had my insurance with GeoVera for decades, and you can probably figure every earthquake company wants me to have their policy, so I can say I have my policy with this company. But I've had it with GeoVera. The prices are right, the coverage is right, and now I can see after a disaster, they do the right thing. So again, GeoVera, we thank you for your support of Insurance Hour. And let's move on. All right, we were talking about some scams and some things to look out for. And I can't tell you how frustrating it is for me when I hear these stories, because people that have had a loss are already at a low point. They've left their home and they're not able to go home because it actually is not there any further. So to think that someone is taking advantage of people at that time of all times, it makes my skin crawl. So please beware. Remember some of the rules. Government officials do not text you. And also, if someone is being overly aggressive, trying to get you to do something, chances are it's not on the up and up. So be on the lookout for that. Okay, next. I've also had some people contact me saying that they're getting contacted from people that are helping them, quote unquote, helping them file their claims or assisting them with their claims. And all they need is some information to be able to help them. Their name, their address, their date of birth, their social, things like that. And you can guess what happens next. These people are crooks, and all they're doing is turning around and stealing their identity. It's also very easy to turn around and go to a credit card company, let's say, with all of this identity that you've just gotten off somebody who you claim to be helping, and tell the bank, oh, you know what? I was involved in the wildfires. You can't mail the credit card to my address that you have on file because, of course, that address doesn't exist right now. Here's my new address. There is an unbelievable amount of fraud going on. It is beware out there. I suggest you have a credit freeze put on your credit reports. It's free to do. You can contact the credit bureaus directly. Tell them you want to put a credit freeze. You can even do it online if you like, and you can have it either permanently put on or you can do it for a period of time. But I strongly suggest people do that right now because the amount of fraud we are seeing with identity theft is just going through the roof. Another thing to be on the lookout for, and we're seeing a lot of these, are crowdfunding sites for people. You might get an email that says, oh, give money to this organization. It's for wildfire relief. And, it might be something called like the Wildfire Relief Fund for Southern California.com. I'm making that up. But it's something you might not have heard about before, but it sounds legit enough. And you go and you give money. Well, guess what? A lot of those are pure and simple fraud. It takes all of about 2 minutes to set up a website, right? And all these people are doing are registering these names, setting up websites, and spamming people getting their money. They are taking advantage of the goodwill, the big hearts that most people have. Horrific. All right, let's move on to the next thing. Also, I want you to be aware, if you have been directly impacted, that something you should be doing right away, and some of these things might escape you because you just aren't thinking about it. There's so much to focus on. But what you can do is you can contact the county assessor's office, and you can have them change your property tax amount. Yes, tax is our favorite thing. You can actually lower or eliminate your property tax while you do not have a property on your location. So you can go to assessor.lacounty.gov, and there will be a link there that you can click on. It will give you information about putting in your address, what happened, when did it happen, and it will walk you through exactly what you are eligible to do in order to have relief from your property taxes. Now, my understanding is, again, I'm not an expert specifically in this, but my understanding is that as long as there is not a property on that land, your property tax is either eliminated or substantially lowered. Living in California, we know our property taxes. We know that they're not cheap. So to all of a sudden have that bill go away, super cool. Speaking of bills, it's important that you pick an address to have all of your bills go to. And I suggest you do not pick the Airbnb you're staying in or your friend's house or anything along those lines. People that have lost their homes and are going to have to wait for their homes to be rebuilt, this is going to be a long and painful process. People are not going to have their homes rebuilt in a year, probably not 2 years either. It's going to probably be 2 years plus. We're talking about the amount of work that needs to be done just on the infrastructure in a lot of these areas that is going to take a significant amount of time. So don't expect that, I'll just put a change of address in for, a couple of weeks or a couple of months, it'll be okay. Maybe I'll use the office address or something like that. Don't do it. I suggest pick a P.O. box somewhere safe, put in that little change of address form to the USPS, let all of your mail go there, and let it go there until your forever home is back together and you can go there and change your address again. And you know what? You don't know what happens in a couple of years. It may turn out that you decide you're not going to move back there at all. You don't want to be in a situation where, number one, you're not receiving your mail right now, and number two, you have to change your mailing address more than once. It's bad enough you have to deal with this. Let's take care of the low-hanging fruit, and let's be sure you're at least getting your mail. Other than that, also, with bills that you have, I strongly suggest with your insurance policy, you put those policies on auto pay. Give the company a credit card, give them your checking account, whatever you're more comfortable with. Make sure that your insurance policies do not lapse. They do not cancel. If you're in any of those areas, you do not want to be in a situation where you have to try and find insurance. Not now, not in the last several years, but especially not right now, and especially if your home is in one of those areas. We're going to talk a little bit more after the break about what type of insurance do you need while you are waiting for your actual home to be rebuilt. That's a big question. Do you keep the policy you have? Do you get another policy? Do you need more than one policy? Are you going to be getting a different policy than the one you had before? All of these and more we're going to talk about after this break. It's important you understand this. It's important you have the right information. Knowledge is power. It really is with insurance. You want to be sure you know what to do and you get what you need to get. This is Insurance Hour. I'm Karl Susman, and we will see you in 60 seconds. Stand by.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Gray.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. Our phone lines are not live. We are talking about the California wildfires, answering your questions, giving you tips. You can still call or text in your question. The number is 559-656-0317. Call or text. Or you can send an email to questions@insurancehour.com. We're keeping all of that. We're going to be answering those questions in future shows. So go ahead, send those questions in. We will get to them, I promise. And a big hello to our new friends over at The Patriot at KEIB AM 1150. We are thrilled to be here with you. On that note, let us continue our chat about the wildfires and the impact it has on everybody. We were talking a little bit about what type of an insurance policy do you need. So let's walk through the process. If you are impacted by the wildfires, and I keep using that phrase impacted, I don't just say you had a loss or you lost your home, because there are lots of different levels of disruption that occur due to this wildfire. I'm talking about everything from the person that used to work at a house in an area that no longer exists. That person is impacted as well. It's not just the homeowner that no longer has a home. It's all of the businesses that were run in those areas as well. It's the people that worked in those businesses as well. It's a lot of, the tail on this is long. So let's start with the person that for one reason or another, either due to a partial loss or a total loss, is no longer able to be in their home. Now, it's important, and this is not a hard and fast rule, because every insurance company deals with this slightly differently. What happens when you leave your house is you're going to be living, we hope, somewhere else. And of course, you need insurance where you are. Some insurance companies will give you the option to extend liability, meaning the liability portion of your insurance policy, from your homeowner's policy, even though there's no home, to a temporary location that you are residing. In addition, they may give you the option to have a percentage of your personal property limit extend also. All right, what the heck does that mean? That means, let's say on your homeowner's policy, maybe you had $500,000 in personal property coverage. Perhaps they'll say, all right, 10% of that will cover for you somewhere else. Some might give you 20%. Some might give you the entire amount. It just depends. Now, another question you might have is, well, wait a second. If I had a homeowner's insurance policy and I no longer have a home, why do I want to keep paying that premium? And again, you want to check with your insurance agent or broker or the insurance company directly to find out what the best way is to deal with this. But in general, you're going to need to have or maintain some type of an insurance policy from the area that there was a loss at. What most companies are allowing you to do is significantly reduce coverage on that policy. For example, if you had coverage for, let's say, $1.5 million to rebuild your home, home's not there anymore, but you don't want to cancel the policy because you don't know if you'll be able to get another one. You have to have coverage somewhere else, whatever the case may be. They will allow you to drop that coverage down to either a percentage of what it was before, maybe it's 10%, 20%, or even lower, just to be able to maintain that policy. And of course, you want to do this to save money. There's no reason to pay for $1.5 million in coverage when there's no house to protect. Also, you're not going to have to worry about obtaining a specific policy if you already have one that will extend to where you are. So your mileage may vary. Every insurance company is handling this a little bit differently. Some companies are saying, you know what? We want you to get a separate renter's insurance policy while you are renting. And the reason for this is they are renting somewhere and the landlord, the person they're renting from, wants to be listed on that insurance policy. Well, homeowners insurance policies are not designed to have individuals listed on the policy, right? They're not designed for that because individuals are not usually additional interests on a property or even an additional insured, even more so, because they're just people. They're not usually the ones loaning money. They're usually banks and entities that do. However, renters insurance policies are designed to list additional interested parties. That's someone that will get a copy of the bill if you don't pay it for your renter's policy, and it will also give them the ability to see the coverage that you have and be sure that it satisfies their lease. All right? So the takeaway is check with your insurance agent or broker, check with the insurance company, but be very poignant. Say, look, I am now living at XYZ place. Do I need a separate policy? Or are you going to extend coverage from my existing policy? And then the follow-up to that is, what changes can I make to my existing policy to save money on it until we reach such a point where I need to start increasing coverage again? That's an important note to also keep in mind. Remember, at some point, you're going to need to rebuild your home. We hope that's the plan, right? Some insurance companies might say that your existing policy will provide the coverage you need. But remember, you just dropped that coverage way down to a low amount because there was no structure. So it is on you to reach back out and say, okay, I need to increase that coverage again because we've started building. Also, some insurance policies will not cover you during reconstruction. You may need to get what's called a course of construction policy. It's a different insurance policy type altogether. Some insurance companies will let you simply make a modification. That's called an endorsement or a change to an existing policy. They'll let you make an endorsement to your homeowner's policy to turn it into a course of construction policy. Some may not. Some might say, nope, you need to buy a separate course of construction policy. Do not, N-O-T, capitalized, underlined, italicized. Do not think that having your contractor or your architect or whoever they might be carry their own insurance, which, by the way, they should. Do not go with any that do not. Don't think that those policies are going to protect you. They do not. They protect, wait for it, the contractor or the architect. It protects them. It does not protect you. You need to have the right insurance policy in place while you have your rebuild underway. Very important. The last thing you want to do is end up in a situation where during construction there's another event or maybe somebody gets hurt, or who knows what happens, and now you're without insurance. If there's one thing everyone should have learned by this, it's the value of having an insurance policy. I've taken hundreds of calls from clients with claims, hundreds, and I can tell you everything from the crying to the screaming to the pleading, it all ends the same way. Oh my gosh, I am so glad that I have this insurance policy. I am so lucky that I have coverage. I've heard horror stories. I am so glad that I have protection. And that's going to be something that I hope people can remember because, and we'll talk about this later, the prices that we're going to be paying for insurance is going to be increasing. Not just because of this event, but because of other reasons that we're going to talk about in the next segment. So stand by. When we come back, we're going to talk about what we should be expecting with insurance premiums over the next few months, over the next few years, and beyond that. And we're going to talk about things that, what types of things you can do to try and save money on your insurance policy while these rates start to climb. This is Insurance Hour. I am Karl Susman. We will be back in 60 seconds.
Have you been dropped by your insurance agency or seen your premiums skyrocket? Susman Insurance is here to help. We're a family-owned and operated insurance agency that's been serving our community for 2 generations. At Susman Insurance, we know how stressful it can be to find the right coverage, especially when prices go up or you're left without insurance. That's why we're committed to finding you competitive rates, whether it's for fire, home, earthquake, flood, auto insurance, you name it. We've got you covered. Give us a call or send a text to 310-820-5200 or visit us online at susmaninsurance.com. Plus, stay updated on all things insurance by joining our text group. Just text 567-4CARL with a K. That's 567-367-5275 to get the latest updates straight to your phone. Susman Insurance, your family's insurance solution.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today and learning about your favorite topic and mine, insurance. The phone lines are not open right now because we are talking specifically about the California wildfires, but you can still call or text in with your questions. That number is 559-656-0317. Again, 559-656-0317. Or you can email your questions in to questions@insurancehour.com. Do the best I can to get back to you directly if you like, or if you like to have your voice read, your voice played on the phone, then just let us know if you leave a voicemail, and during one of our question and answer shows, we will play you live and I will answer your questions live. That reminds me, I get a lot of questions and I'm always trying to address those questions here with you, but I'm only human and I might make a mistake. And I want you to understand that my goal is to get you the most accurate and up-to-date information all the time, but I might miss the mark. If you hear something and it just absolutely does not ring correct for you, or you've been told something that's exactly the opposite, let me know. Give me a call, shoot me an email and say, hey, Karl, you said da-da-da-da-da, but I've heard something else. I will then take the time to go and research that again and find out what the correct information is. Again, this isn't an ego thing. My goal is to be sure that you have the right information, the most up-to-date, accurate information. And if I find out that there's better information, I will be the first one to jump on here and tell you, hey, I said this before, turns out this is now the case. I want you to have the right information. So don't be shy. If you're hearing something and you think it might not be correct, let me know. With that, let's move on. So what is going to happen with our insurance market in California? We have been suffering the last several years, and that's putting it mildly, suffering with what we're calling an insurance shortage. What does that mean? It means that most insurance companies, and I say most, we can say around 90 or more % of the companies that hold and write insurance policies in California have stopped offering coverage slowly over a period of the last few years to, let's just say, current time, when basically they've all stopped. And the reason for this is very simple. It's dollars and cents. Let me explain how that works and why that works. In California, in order for an insurance company to sell, we're talking about homeowners insurance, so let's just stick with that. In order for an insurance company to sell a homeowner's insurance policy, they have to create the policy. They have to decide how they're going to charge for it. They have to decide what comes within it, what limits it has, what coverage it provides, all sorts of things. They have to basically create a policy, create a contract. Now, they can't take that contract and just start selling it. They have to turn around and go to the State Department of Insurance and say, hello, State Department of Insurance, I want to sell this policy, and here's how I want to price it, and here's what I want to do. The Department of Insurance then has to look at it, have all their, I call them the big brains, all the actuaries and all those other folks go through it and look at it and see, does this make sense? Is this fair? Is there anything in here that's discriminatory? They go through it with a fine-tooth comb. And after a lot of back and forth, the Department of Insurance, hopefully, will approve that contract to be offered to the public. But like everything else, times change. Risks change, people change, all sorts of things change. So insurance companies need to make changes to those policies as well. Well, anytime an insurance company wants to make a change to a policy, whether it be the price, whether it be a discount, whether it be how they underwrite something, do they want to take trampolines if they have one? Do they not? Do they want to just surcharge if they've got an aggressive dog or exclude the dog? All these different minutia that come with a homeowner's insurance policy, they might want to change. Well, before they can do that, they have to once again submit a request to the Department of Insurance, and the Department of Insurance has to say okay or not okay, but try it this way, and there's an up and back until the Department of Insurance is comfortable. This happens with the price that's being charged as well. Now, well, here's the rub. Insurance companies are not nonprofits. They are privately held companies with shareholders, and they must have a profit. Forget shareholders. If they're not making money, then they don't have money to pay claims. It's pretty simple. It's just math here, right? So in the event that an insurance company is not able to get a sufficient rate, or they're not allowed to charge to surcharge for certain things, they're not allowed to give discounts for certain, if there's something that breaks down between an insurance company and their actuaries and what they want to do and what the Department of Insurance is willing to let them do, we have an impasse. And that's sort of been the story in California for about 30 years. Now, that's been a problem. However, it's been doable. That's the official term, doable. It's been doable. It's happened. Now, we've lost a lot of insurance companies because they simply can't make money here. They're not able to charge enough premium or underwrite basically the way they want to. They're not able to make it work, so they've left. So we've been left with other carriers that are willing to write. So we've had less choice, which personally I do not like. I like free market. I like choice. I like competition. And we've had less of that because of these heavy regulations. But what's happened now over the last decade or so is because we are having such wild events from the weather, we are seeing what are called 150-year events, which, spoiler alert, that's an event that's anticipated every 150 years or so. We're seeing those every 3 or 4 years. Now think about that. If you price something with the expectation of a massive loss every 150 years, when it's happening every couple of years, something's not going to work. You're not going to have money. You can't regulate an insurance company to the extent that they're losing money. And if you do, it can't last forever. So what we've been seeing over time, over the last few years, is as these events keep happening, as these humongous claims start coming in from these massive disasters that we're seeing, mind you, this is not just California, this is happening everywhere, the insurance companies are losing money. And again, if you're paying $1,000 for claims, but you're only collecting $950 in premium, how long can that go on? Forget profit, not profit. How long can you possibly be expected to have money to pay claims? One of the largest insurance companies in the state of California, State Farm, has put in 2, not 1, but 2 emergency relief declarations to the California Department of Insurance that basically say, if you do not let us raise our rates, we will not be able to pay our claims. Period. It's not political. It's not a money grab. It's just money. It's just dollars and cents. The Department of Insurance has to look at the books from State Farm and decide, is this true or not? Does it add up or not? Do they have the money or do they need more money? And based on that, hopefully, the department will make their decisions whether the rates go up or down. So rates are going to start changing, and it's not because the insurance companies want to start making more money. Of course, they'd love to. but they have to stop losing money, which is actually what has been happening. Don't let anyone convince you otherwise. It's not true. One more quick break. We'll get right back to it. This is Insurance Hour. I'm Karl Susman.
Ladies and gentlemen, boys and girls, in just a few moments, the Window to the Magic podcast show will begin.
My name is Patrick.
My name is Calvin.
I'm Mouseketeer Greg.
My name is Paul, and I will be your guide through the wonderful world of Disney sound experiences.
This show is a weekly trip into the world of the Disney theme parks and resorts.
And this is the place where you get to use your ears to surround yourself with the magic.
For your safety, please remain seated while listening to the windowtothemagic.com podcast.
Maybe there's a name for this, something like Disnotic obsession. Please visit windowtothemagic.com for more information, or you can find us on Apple Podcasts and in the iHeartMedia app.
Hello. This is Insurance Hour. I am your host, Karl Susman. Thank you so much for being here today. We are talking about my favorite topic, insurance. Our phone lines are currently not live because we are talking about the California wildfires, answering questions that have already been submitted, and talking to you about what you need to know. A quick shout out to our new friends at KEIB AM 1150, The Patriot. We are thrilled to be here on board with you guys. All right, now then, we were talking before the break about insurance companies and premium and what should we be expecting in the future. As a matter of fact, this has been a very important and full show. If you've missed any part of this, then either jump back to the beginning and listen right now. If you're listening to this on some streaming platform, you'll find us everywhere. We're on the iHeartMedia app. We're on Spotify. We're on YouTube. We're on Apple Podcasts. Pretty much everywhere. If you search for Insurance Hour, you're going to find us. But this show has a lot of information. So if you've missed any of it, definitely go back and find the beginning of it and start listening. So we're talking about how insurance companies are making money or losing money, whichever is the case. And in California, they are losing money. Now, I know you've probably heard otherwise, and you said, well, wait a minute, that's not true. They're making money. Well, again, let's look at this rationally. If we take for a fact that the Department of Insurance is extremely liberal, which we will, and extremely consumer friendly, which it is, and we take for a fact that they will only approve rates that they can see add up, meaning they are absolutely necessary. The Department of Insurance has regulations it follows where it specifically says premiums must be adequate but not excessive. Those words are actually in the law. It's in the regs. So if we accept all of those, and we have to because it's a fact and it's there in black and white to read if you want,